So JP, in your presentation today, you talked about Ontario farmland values. In the first 6 months of 2012, there had been a 15% increase, and when the final number is probably going to be in for the end of 2012, it's going to be at 30%. What's driving these increases?
Well, we still have to wait for the official numbers, but of course they're likely to look a little bit like the first 6 months of 2012. And I would say, in terms of drivers, two things: crop receipts and interest rates. I think those are the two things to remember and to monitor. So crop receipts, you look at net cash income in Ontario, it's been moving up. And so despite the challenges in the livestock sector, which means that for the crop sectors, it's been really good recently. Of course, the drought in 2012 has pushed prices up even higher. And so we're looking at some significant increases in crop receipts for 2012 when we get the final numbers. And that is likely to turn out a pretty strong increase for farmland values overall for the entire year last year.
And one of the things you talked about, driving prices was world stocks and crop stocks and ending stocks. What role is that going to play moving forward, given where stocks are today?
Yeah, so the one thing I like to say about this is that when the drought occurred last year, it was, we've experienced a drought similar to that in 95, in 88, but the one thing that was different about this particular drought in 2012 was that it occurred at a time where stocks were already low to begin with. So we're going to have to live with this drought for the entire marketing year this year, and even perhaps next year as well, because stocks are at an all-time low. I mean, in terms of the stock-to-use measure that people look at when they think about prices and the relationship between supply and demand, we're at an all-time low for the United States, and the lowest it's been for the last 15 years, the lowest it's been for the world for more than 20 years. And so this is going to sustain crop prices above their historical average of the last 20 years.
So you talked earlier during your presentation about farmland values, and I'll ask, is Ontario farmland overvalued? And talk about how you calculate the value.
Right. So when you think of farmland being overvalued, undervalued, you first need to think about what are the drivers, and we talked about that previously. I think you can sum it up with interest rates and crop receipts. So just thinking about crop receipts for a minute and then leaving aside interest rates, then you can think of stuff of measures like how many bushels of corn does it take to cover your land costs. And if you look at Ontario farmland value and you look at Ontario corn prices, for example, and you look at Ontario yields, you come up with about 6 years that it takes for corn gross receipts. I'm emphasizing here gross receipts. We don't necessarily include expenses in this, but you look at corn gross receipts. It takes about, at current market prices and current values, it takes about 6 years to cover your land costs. We've had a measure that said that land was actually more expensive than it really is right now. But again, this 6 years statistic is actually pretty close to the historical average of the last 40 years, which would suggest that farmland is not that overvalued. But at the same time, it makes sense only at current market prices. So if you were to move away from the trend yield, you can move a little bit above or a little bit below, but if you were to move off the trend yield for quite significantly, if prices were to come down quite significantly, then that's perhaps when crop receipts would fall and start to have a real impact on farmland values. But as long as we can sustain crop receipts around the values that we've seen over the last few years, I think farmland values are pretty much where they should be.
Now talk about a few things might drive that price up or down. Economic growth, world economic growth. What are the type of things farmers should keep their eyes on?
Well, a couple of things. For sure, world economic growth, right? You have the short-term factors, right? The weather, the droughts, and all that. But if you look at the last 5 years, even 10 years, one of the number one drivers in agri-food markets was economic growth in emerging markets. And that's, when you have an additional dollar of income in an emerging market, it's about, as much as 40 cents of that additional dollar will be spent on food. And a lot of that will be spent on additional proteins, resulting in a higher demand for feed grains and meat. And so it's really about, when you think of China, and everybody likes to mention China, but really when you think of China and you think of all the other emerging markets around China and Southeast Asia, we really want to see that growth that we've seen over the last few years be sustained. And China actually has slowed down a little bit in 2012, but there is evidence right now and some statistics that suggest that they're bottomed out and that growth is going to resume again, which is a good thing for Canadian producers.
Two questions for you. Which is more important, crop receipts or interest rates in driving this?
Yeah, well, that's a really good question, because in the United States right now, we haven't talked about farmland values in the U.S., but if you look at the Corn Belt, I see a growing number of analysis that suggest that interest rates rank first. It's interest rate first and then crop receipts. Our own analysis suggests that crop receipts actually come before interest rates. Now, why is that? Maybe it's because we haven't seen the increases in farmland values that they've seen in the U.S. Maybe it's because interest rates have not fallen as much in Canada as they did in the United States. So a number of reasons for this, but right now I would rank crop receipts first, interest rates second. Interest rates, if they go up, 25 basis points at a time. Having said that, I'm not sure that they're going to go up this year in 2013, maybe just towards the end of the year maybe. But if they do go up gradually, 25 basis points at a time and slowly, I think that's not going to be a major impediment to farmland values. I think that's you can still see the farmland values, sustain some farmland values that we've seen in the past. I think it's mainly crop receipts first and foremost, given the close relationship that we've seen over the last 10 years between farmland values and crop receipts.
Final question, interest rates, the big question. Where are they going to go?
Well, nobody knows. That's the true story. I mean, nobody knows where interest rates will go. I mean, it's a losing proposition to actually try to call interest rates. But having said that, you look at inflation right now in Canada, it's really low. It's below the target of 2% of the Bank of Canada. So it's really difficult to see the Bank of Canada raising interest rates anytime soon. Now, the one thing that I would say, though, is that in the media most of the time, when people talk about interest rates in Canada, they mention the United States. I mean, we should know better, right? Last time interest rates went up in Canada was in 2010. The United States did not raise the interest rates at the time. The Bank of Canada did, because they were seeing something in Canada that needed to be addressed. Now, because if you look at the mandate of the Bank of Canada, it says nothing about the value of our dollar. It says nothing about interest rates in the United States. It's about inflation. That's their mandate, the stability of prices in Canada. And so if we start seeing businesses invest a little bit more, right now businesses are sort of on the sidelines waiting to see what's going to happen with the world economy and all of that. But if we see inflation pick up, if we see investments in Canada being made at a faster pace, I think this could be a sign that interest rates could go up in the future. But again, as I said, I don't see this happening anytime soon.
Good stuff. Thank you so much for your time today.
Thank you so much for the invite.